buy-in once price reaches all-time highs can seem low probable. I'm going to show you the confluences that you need to continue to buy whilst keeping your win rate high. So let's get right into it. We'll start with some higher time frame context. So we're on gold here. You can see on the weekly price has been pushing to the upside, respecting bullish arrays. You can see we came into this FVG and we've rejected away. So the higher time frame context is not the issue. The confusion may come in when it comes to deciphering where your target is going to be, because a lot of the time you are going to be looking for some kind of high on the left of the chart, some kind of liquidity level that's going to be your major higher time frame target. But when you're at all-time highs, you don't get that luxury. Okay, so there's extra things that you need to look for in order to be confident in price continuing to push to the upside, because otherwise you just don't know if price is going to reverse. Okay, so if we go on the 4 hour here, the first thing we want to look at is how is price actually moving to the downside, right? How do we know that it's a retracement and not just, an actual reversal? So you can see that we retraced into the weekly FVG, and the manner that we retraced, right, was pretty slow and very choppy, right? You can see that we've literally just been moving like this to the downside. Now, when price is actually impulsing in the direction it wants to go, right, targeting liquidity, it doesn't move like this, okay? It moves with much more aggression, okay? And it doesn't build up low resistance liquidity, right? You can see these highs here that price forms, essentially is relative equal highs. And you can see here, that's what we've formed within the leg. Okay, so it's very choppy price action. It's very slow. And this is typical of a retracement, right? Which is going to tip the hand of the markets a little bit. So you can start to understand that price isn't done running to the upside. Because when we form highs in the market, price will form a high like this. We'll have an extremely aggressive move to the upside. Have an extremely aggressive move to the upside, and then an aggressive move to the downside, and that gets continued. Okay. When price is forming, something that isn't actually going to be a high that holds in the market, a lot of the time we will just build up liquidity, right, and enter a consolidation essentially. Maybe we take the low, and then we will continue and keep forming new highs. Okay, and that's what we have here, right? We have that choppy price action. We have that liquidity at the top of the market, and price has entered a bullish PD array after taking out liquidity to the downside, right? So we've had that consolidation essentially. Price has taken a low, and now we should target the highs. Now, the next thing that I recommend you do if you want to continue to buy after these all-time highs is don't be trying to get in low down in the leg like you usually would when we have, loads of clear targets on the left side of the chart. Okay, because we only really have a little bit of information to go off, right? We don't have a lot of data. We just know that this is probably going to be a target. We don't want to be buying all the way down here. Okay, we want to see price build up some kind of bullish order flow in the direction of the target, because that will give you extra confirmation, right? That price is actually going to target these highs. Okay, so you want to see bullish order flow. And you can see here that we form this bullish order block, right? Price taps into the order block and moves to the upside. We actually close through this bearish fair value gap. Now, when I was actually trading, I was monitoring this zone here and I saw the change in state. I saw price come into this bullish order block, but I decided that I'm going to wait and see price close through this FVG, right, and build that bullish order flow a little bit better before I engage, right? So that's exactly what I waited for. And you can see that we go to form this 4 hour bullish FVG, right? And price taps into that. And you can see the next candle pushed away and we got a really nice reaction. So this is how you operate on a higher time frame, right? You want to decipher, is price reversing or just retracing, right? And look for those characteristics that I just pointed out here. And then we want to wait for price to start building bullish order flow in the direction of our targets, okay? And then we go on to the intraday, right? You can pretty much just operate as you usually would with your personal intraday model. So you can see here that we built up even more relative equal highs, right? So that's a short-term target for price. And above this 4 hour FVG, price has left this old low, okay? And if I let this play out a couple of candles, you can see that we come and we actually take out that old low into the 4 hour FVG, which is the first part of my intraday model that I look to see playing out, okay? Then from here, I'm simply looking for price to go from this sell program, right, from respecting these bearish PD arrays to forming bullish ones and disrespecting bearish ones. Okay, so if I let this play out on the 5 minute, you can see that we start to build 5 minute order flow, right, you can see that we close through this FVG here. So we form an inverted fair value gap. We displace through this swing high up here, which for me is an essential confirmation for my entries. And then we also form this bullish order block. So price has formed bullish PD arrays and we've disrespected bearish ones, right? Because we close through this bearish FVG. So for me, this is the lower time frame confirmation that I need in order to go and target higher prices, right? To target that buy side liquidity. So you can simply enter here, stop loss at the low, you can target this high here, or because we're expecting price to come higher, you can target some kind of liquidity on the left, right? Any of these low resistance liquidity highs makes sense to target. Obviously, you want to be aware of what session you're in and, you know, how far realistically is one session going to go. You know, as the intraday trader, I just catch session moves. So if we're still quite a way away from a main target, I'll just look for liquidity that's realistic for that session to target. So letting it play out, you can see that we do tap into the entry. We go to the first target and price comes back to internal range liquidity. And then we go to, you know, the next logical target that makes sense for New York session to run to. So this is how I would operate within all-time high conditions, right? When price is forming all-time highs, it's still very high probability to buy if you wait for the right confirmations, right? The only times you're going to slip up is when you don't wait for price to form clear liquidity targets and you just try to keep buying for no good reason, right? There has to be evidence for the move. Now, if you want more free learning resources that you can actually download, I'm going to leave a link to a couple in the description. One of them is about operating in a consolidation. Another one is an overview for my trading model. And I'm going to leave a link to my X as well and to mentorship if that's something that you're curious about. But yeah, I hope you found value in this video and I'll catch you on the next one.